as someone who has tried to do my best to save and be ready for retirement, I hate it when the rules change. You gave us these rules. I've been working hard, and now you're trying to change the rules. Welcome to another episode of Kiss My Assets podcast. This is Jamison. I am co-founder, CEO of Neighborhood Ventures, and excited to have one of our real trusted partners and experts, Matt Sorenson, here with us today with KKOS Attorneys and the founder and CEO of Directed IRA. Welcome back to the podcast, Matt.
Yeah, you guys had me back. I guess I didn't screw up. I appreciate it. It's always good to be here.
Well, we had a great session with you a few months ago. We've sent that to a lot of investors who are interested in converting their IRA to a self-directed IRA.
Yeah.
And that's been a great resource for us. And I saw you messaged me about this new law that's coming through Congress. So we wanted to get you back in here. I know you've been making the rounds all across the board at different podcasts and different media talking about this bill. And it's really important for all of us to understand what's in this. It's 800 pages.
Yeah. You get this House tax bill, 800 pages. Congress barely knows what's in it. You know, they really don't.
3.5 trillion with the T.
Yeah, 3.5 with the T. That's right.
Yep.
Spending. So it's scary, and there's some stuff in there that, you know, there were some things that people thought would be in there, like 1031 exchanges for real estate were on the chopping block. Luckily, that didn't make it in the bill, you know, so you can still do 1031 exchanges in real estate. But there's capital gains tax increases. There's obviously increases on the higher income. You know, the Democrats have said they're going to raise tax on people making.
We knew that was coming.
Yeah, and that was expected. Corporate tax is going up 5%. That's cool. They got a 10% tax cut under Trump. So like now they're going halfway back up. No big deal. There's some kind of stuff that was like, all right, we get it. But then there were some surprises in there for IRAs that we were like, whoa, where did this come from?
Yeah, and credit to you for being one of the first people out on this. I know that, you know, when the bills come out and it's obviously 800 pages, finding the things that really matters sometimes difficult, and you were one of the first people. And just to give our listeners a little bit of a backdrop, you've been a practicing attorney in this space for a long time, and you published the Self-Directed IRA Handbook, which is the most widely used and referenced book in the industry. That's how I found you. I purchased that a few years ago. Then it was great. You were right here in Phoenix. You're only a few miles from our office in Central Phoenix. So this is kind of your baby, you know, self-directed IRA from a legal standpoint, and as good as anybody nationally.
Yeah.
So credit you for finding this out. And yeah, we as, you know, citizens, we need to know what's happening in Washington. We have a couple of senators who are some of the more impactful senators because they are kind of on the fence on some of these things.
Yeah.
And so we wanted to have you on, let all of our listeners and our broad investor base across Arizona know that this could impact them.
Yeah.
And that we can do something about it before this all happens and then, you know, things change. So wanted to have you on and kind of want to jump into a little bit about the timing right now. So we've heard on the news that this bill is going back and forth through some committees in the House, and ultimately both the House and Senate need to pass it. Biden will definitely sign it. It's, you know, the $3.5 trillion, I think he's calling it Build Back Better plan. So he's going to sign it if it gets through the House and the Senate. Where's it at as far as timing today? And today's, you know, Tuesday the 28th. This will come out tomorrow on Wednesday the 29th. But where's it at today in that process?
So I do like a call every morning with the lobbyists on this. It's not what I want to do. It's 7 a.m. because they're all on the East Coast. They don't care. But my daughter has to listen in as I take her to work. She's like, I'm like, this is a civics lesson. But right now it's passed the House Ways and Means Committee, which is where the bill originated. And which is interesting because I had a bill. I'm part of a Coalition for American Retirement that had a bill in the House Ways and Means Committee going the other way on some of this stuff, like making it easier to use IRAs to buy real estate or invest in an LLC or limited partnership and stuff like that. And so, and that bill was like, had bipartisan co-sponsors and everything. And then out of the woodwork, we get this massive tax bill, 3.5 trillion with a ton of stuff in it and a little section on IRAs in there. And so we looked at the IRA section as part of these lobbyists I've worked with for a while. And it was like, I mean, that was a tough day because it was like, wow, they want to stop this. They don't want your IRA to buy real estate anymore. They think it's something that just the uber wealthy do. And so what happened was, if you remember, Peter Thiel in the news had a $5 billion Roth IRA. He invested it in PayPal.
Yeah, PayPal co-founder. Yeah.
Yeah. And then he was the first outside investor in Facebook, and he used his Roth IRA for that. And now it's worth $5 billion. Well, he invested into some of the most successful companies in American history. You know,
Right.
like in like the last 20 years, you could have put a dollar into, you'd be a millionaire, you know?
Yep.
So, that's what he did.
But that got some negative headlines from folks saying this uber wealthy guy,
Yeah.
not only is he uber wealthy, but it's all tax protected in a retirement plan. It wasn't really maybe the intention of the people who wrote the law to have a bunch of Peter Thiels out there.
Yeah. And so that was so the Democrats kind of got up in arms about it on Capitol Hill. And it didn't help that Peter Thiel's a Republican. He was a big Trump supporter. He spoke at the Republican National Convention. And so he was like the perfect like poster child for them to just go after. So so that's where we're at, is there's all this political uproar about people who use their IRAs to buy non-Wall Street assets, basically. You're like, I don't want to buy a mutual fund or a stock. So Congress's reaction was, well, we're just going to stop you from doing anything off Wall Street, you know? So just
So, which is interesting. So the government's has for decades tried to give us some incentives to put money away, to build a retirement. And, you know, you and I have been brought up in this era where it looked like Social Security would not be there for us.
Yeah.
So we need to put money away in our own 401k. We need to take care of ourselves. There's not going to be government support there. So they gave us these incentives like IRA, like 401ks to do that, you know, and in the last couple of decades have made those things look good. And in order to fund those, you have to sacrifice along the way. You have to say, okay, am I going to put money in my IRA in my retirement account, or am I going to go spend it on something?
Yeah.
You know, so these incentives were in place to help us start to save more, so that we wouldn't be so reliant on potentially Social Security, or in prior generations, employers had a lot of pensions, and pensions are a thing of the past now. So we've been doing this. And we've been incentivized to do this, and now they're kind of saying, "Well, we're going to change the rules." And as someone who has tried to do my best to and like a lot of our investors do our best to save and be ready for retirement. I hate it when the rules change. It's like you gave us these rules. I've been working hard, and now you're trying to change the rules. And this is two little sections in the bill. Section 138312 would limit your ability to invest in offerings like ours, in real estate funds with an IRA. You could only use your IRA to invest in Wall Street. Which, you know, is where I came from. And it's like, okay, you have to put your money in the Wall Street game, which is a roller coaster, instead of leave it here locally in real estate.
Yeah, you know what's crazy is just yesterday, the SEC came out with a report on private investments, just individuals investing in private investments versus publicly traded securities, and found that people perform better in investing in private investments because they're all concerned about protecting the investor, right? They don't lose and there's more risk, but there's greater overall return, was this report from the SEC just yesterday. And now they're saying, but wait, not only is it not about choosing to invest in a private investment or a publicly traded thing on Wall Street, like now they're saying you don't even get to choose. And then the other hand, the SEC saying it's actually better, not to mention diversification and just investing in what you want and your own choice. It's just like, no, we're going to try and put you back over here. And a lot of people have been like, it's Wall Street, isn't it, Matt? It's Wall Street. I'm like, it's actually not. It was an overreaction to Peter Thiel's $5 billion Roth IRA. But I've talked to enough senators, particularly on the Democrat side, and seen enough correspondence of my clients who've been communicating over there. they are laser focused on large balance accounts and people putting in founder shares and stuff.
Yeah.
They don't read the provisions and know that, okay, you might prevent that, but at the same time, you're going to lock out 1 million people who are just trying to get to $1 million buying a rental or investing in a private company or fund.
And we're gonna in the notes of the podcast, we'll put these provisions, and there's certain things that we can do and that you would recommend folks do when they reach out to their congressman to inform them and tell them how important this is to us. So one thing I heard you mention is that 98% of IRAs, self-directed IRAs, are under 1 million.
Yeah.
So, if you talk about maybe there's the 1 or 2% that are they're definitely not all Peter Thiel, but they're the uber wealthy. But the other 98% of us are just trying to build an IRA under $1 million.
Yeah.
And yet this penalizes everybody across the board. So it's almost like you call it an overreaction. And it's kind of like, I don't know if they, I don't know if Kristen Sinema, I don't know if our other senator, what's
Kelly, Mark Kelly.
Mark Kelly,
yeah,
who I think they're both reasonable folks.
Yeah.
I don't know if they know this is in there. And so we as citizens here in Arizona need to let our Congress folks know that in this 800-page bill, there's some things in here that don't make sense for hardworking Arizonans.
Yeah. I've been, I've had a number of calls with Arizona congressmen. I'm focusing on the Democrats. Republicans have already said they're voting no on this. So,
okay,
I've been,
that's important to know. So it's more the Republicans across the border know. So we need to focus on the Democrat side. Okay.
Yeah. So if you're listening and you're like, man, that sucks, I want to get involved in this, write your congressperson, your representative. If they're a Democrat, especially write them. Tell them I'm not a billionaire or maybe even millionaire. I'm just trying to get to that so I can $1 million so I can retire. Geez, wasn't that what we were supposed to do?
Is this effective? So when we reach out to these people, are they going to even listen to us?
Yeah, because yes, they have to, and they have staff for it. And you might not get the congressperson or the senator, but you're going to get someone from their staff that feeds them the information.
They're going to log that.
Like, hey, the biggest complaints we're getting is on these IRA provisions. Of all the 3.5 trillion we're trying to raise, it raises like 40 billion or something. Like, do we really need that? Let's just kick that out, and so that's like what we're hoping to accomplish is we know that what we understand the process is going to happen is this is going to get whittled down. If the House does pass it at 3.5 trillion, which we're hoping they're even going to whittle it down in what's called the Rules Committee next. That's the next stage. It goes to Rules Committee for a little bit, and they can chip away at it if they want and modify it. And then it goes to the full House for a vote. But so there's a chance that the Rules Committee gets chipped down and they say, let's get the IRA provisions out of there. Too much flack. Because the moderate Democrats do not want to run against Republicans saying, you robbed my IRA. Because Republicans have already came out and they have their talking points already on how they're going to go run against moderate Democrats. One of the points on there is you caused taxes and penalties in my IRA.
Yeah, to non-wealthy folks.
Yeah,
to
and I make less
folks.
than $400,000 a year.
Right, because that's always been their threshold. If you're under that, then we're not going to raise your taxes at all. But in this scenario, that's not accurate.
Yeah.
And so right now the sausage is being made on an 800-page, and so we can really have a say in what's happening.
Yeah.
As this huge bill gets passed, which is our taxpayer money.
Mm-hmm.
But
you're right for Arizona. Like Sinema and Kelly are going to be critical. Sinema in particular, who's been on the fence about the bill anyway. She's had issues with some of the prescription drug provisions in it. So, and they are, both of them have, staking themselves out. Sinema has a track record of it being independent. Kelly, pretty new, but he ran on that of being independent too.
He said he's a John McCain type of senator, so that means he's open to both sides of the argument.
Yeah, and we all know McCain went in and went thumbs down on stuff that he was kind of lone wolf on the Republican side. But so those are two critical people. I have not talked to either of them. I've worked with their office in email communication. I'm still trying to get meetings with them.
And we do have some folks who are listeners and investors who have relationships with those folks, and now's a good time to reach out. Yeah. And so, and just to be crystal clear, we want to specifically talk about these two sections that are problematic. Section 138312, which will prohibit investments in IRAs when the investment is permitted based on asset or income levels of the investor. This is when you have to say if you're an accredited investor or not. That those you couldn't use your IRA anymore to invest in that, correct?
Correct. Yep, that's what it's intending to close out. But it can pick up a lot of other things, so we're trying to be careful about it. Then 138314 is about people who buy real estate with an LLC where they manage. And so they're like, well, I need to manage the LLC so I can write the checks and pay the bills. And
that's a great way to do it.
Yeah, and it's very popular. We have thousands, tens of thousands of clients that use that structure, but they want to shut it down. And it's like, that doesn't hurt. That's everyday people that use that structure. If you're wealthy, all my wealthy clients that have IRA LLCs,
they don't do that.
They have someone that does that.
They have a family office.
Exactly. They have an asset manager that does that, and they pay them. And so,
this is ma and pa who have a couple rental properties. They're holding it in their IRA. They won't be able to do anymore. It doesn't make any sense.
Yeah.
So these are the two sections. We'll put them in the notes here. And what you want to do is copy and paste these two sections, right, in an email and send to your senator and say, senator or representative, and say, look, these should not be in here. This is not the intention of an infrastructure bill.
Yeah.
Build Back Better is not this.
Yeah.
And obviously, you already went through the other areas where they're trying to increase revenue or increase taxes, revenue to the government. You can go try to fight the whole thing, but specifically, some of these things really is where everyday folks get hurt, and so I think now the reason why we wanted to have you on, Matt, is to just kind of say now's the time to act. As we're in a country where we have representative government, we need to reach out to these folks and let them know that these things are non-starters for us.
Yeah, and I think there were some things in the bill that they did target, like for the wealthy, like there's a cap on IRAs at 10 million. Okay, like I concede that. And I'm like, you don't need an IRA more than 10 million. If you have one that large, you're going to sleep okay if this bill passes, knowing you still got a 10 million IRA.
Yeah. So that would get rid of the Peter Thiel IRAs, but it would still allow people under 10 million. That seems reasonable.
Yeah.
Right?
Let us all get up to $1 million. That's what people want to have typically, just like, throw out a number. I want to have $1 million in an IRA to retire on. And financial advisors are going to tell you you're going to need 2.5 actually, but if you want a comfortable retirement, especially if you got like somebody.
But we're not talking lavish lifestyle. If you have $1 million in an IRA to retire on, that's
you're
what
living,
you need.
You're living cautiously off of that. And so, and we don't have pensions anymore. Our generation, we don't have that. And we're, I'm 41, I should say, I should speak for myself, but there's just not on my friends and family, they don't have pensions anymore. We're all relying on our 401k or IRA to retire on. So it's critical.
So how quickly is this all happening, and when should folks take action here?
So what's happening right now is the Democrats are divided between moderates and progressives, aka liberals, and and the moderates are like trying not to have to vote on this at all. In the House and the Senate, they're like, we don't even want to vote on this thing. Just pass infrastructure, true infrastructure, not this 3.5 million tax and spending bill. It's going to raise taxes. And let's raise the debt ceiling, because that's what's going on right now in Congress too, is they got to raise the debt ceiling because the government's going to run out of money.
Right.
They got to go get more debt. So what we've heard is that it's possible it could come up this week or next, but it's probably going to be a couple weeks because they got to resolve the debt ceiling first.
That's the most urgent thing right now.
Yeah, but Pelosi sent a letter out today to all the House members, the Democrats in the House, saying she wants to vote on this like now, like this week. We just don't. From what we've heard, we just don't think it's realistic that's going to happen because they got to fund the government first.
And this isn't a political thing, Republican or Democrat. This is a kind of Main Street, and just having more ability to utilize what the incentives the government has had in place for a while.
Yeah.
Let's just talk a little bit about if this does pass. I'm hearing there's a 2-year time frame to where it has to be unwinded. Those investments would need to be unwound. Mm-hmm. And I would just talk to any of our investors. Our projects last a little bit longer than that. Our fund is 5 years, should be done by the end of 2025. If your investment has to be unwound, we'll deal with that. We'll have to deal with it, and we will handle that in the appropriate way. But it's real difficult for us because we don't want to necessarily have to sell a building to, before it's reached where we want it to go.
Yeah.
And typically these assets are illiquid in an IRA. So the government saying you have to make this happen, unwind those investments in 2 years that's pretty difficult too.
Yeah. My business itself is, we're a trust company. I had to raise capital. We're basically a financial institution here in Arizona. My largest investor is an IRA. Why not? I love that
Makes
stuff.
sense.
And I had, so yeah, they're going to have to get out, And so
an IRA funded your business, which is what it's meant to do, and it's self-directed.
I've hired 30 people in 3 years. I hire a new person every 2 weeks. It's like we've been a huge success.
And it's fueling local growth of a local company, which is what crowdfunding is supposed to do.
Yeah.
And so it just is another reason why this is so problematic personally, I don't think it's going to stay as long as we do our part and we engage. It's kind of like voting. You need to vote. When you're aware of something like this, you need to take action as well. But that's a great point. It's not just real estate; it's startups. How do you unwind investments in a startup?
Yeah, we have so many clients invested in startups that need capital, that have been successful, that have tons of employees, and what are they going to do? Distribute the asset, pay taxes and penalties, try and sell it before the company's mature enough where they'll make a profit. They're going to have to take a loss. It's leaving people in a really bad situation. So, but you're right. I think there really just needs to be education with Congress. The thing is, a lot of the executives in my industry, we got together and I was trying to get some messaging out. They're like, let's just hire some lobbyists. I'm like, well, first of all, we already have some. And the Congress, particularly the Democrats, are like, they just think if a lobbyist is talking about an IRAs, it's just some billionaire that's funding this. So they're like, tell me something that's I can read here in the bill maybe, but I'm not doing anything just because some lobbyist is yelling at me. So they got to hear it from the people. They really do, that to know, oh my gosh, I have constituents that are going to get hammered on this. I was really just trying to get the Peter Tills out there, the billionaires and the 10 million plus accounts. But I'm really going to get if I'm a congressman, I might have 500 people in my district that I'm going to go raid their IRA. I'm going to take from one working person or retired person's retirement account to go give someone else in a tax cut.
Right.
It doesn't make sense. They don't want to do that. They just don't know that that's what's happening.
We're going to put in the show notes samples of what you could say in an email. So that would be easy for folks if they want to copy and paste it just as a kind of a structure to start. Because sometimes that's the hardest thing is how do I start this? Yeah. Put that in an email. We'll put the contact information for Arizona's senators and congressmen, particularly on the Democrat side, right? On the congressman, I think as we already alluded to, the Republicans are saying they're going to be against this. So we want to we don't need to inundate those folks.
Yeah.
It's more
unless you know someone. That's what we've done. We've leveraged some senators we know or some House members we know to say, hey, who's some of your moderate colleagues? Because there is we've worked the Problem Solvers Caucus. That's about 25 Democrats and 25 Republicans in the House. And so we've gotten to some Republicans on the Problem Solvers Caucus and like, hey, who do you know that you think would be not happy with this bill with the IRA provisions? Oh, let me connect you with these offices. And they've done that, and those have actually been very helpful. So that can be helpful, but if you're just email them the general thing, they're gonna be like, yeah, our guy's voting no on this anyways. So we're with you.
Well, again, and some of our investors don't use their IRA to invest.
Of course,
but I would just invite anybody, any of our listeners, any investor, to reach out to their congressmen, to their senators right now. This is something that you may end up wanting to do in the future.
Yeah.
It's something that if this is changed, it's not moving in the direction of more flexibility with investing. It will funnel more money to Wall Street, which is going the wrong direction, in my opinion. And I think all of us should be concerned, and it takes 5 minutes to send an email from a local Arizona constituent. It's going to be pretty powerful if we can all act on this.
Yeah, absolutely, totally agree. And our state and our senators could be key on it. So
yeah, and I think that's one of the other reasons we wanted to have you on is the folks here in Arizona. Just as we had a lot to do with the election, the last presidential election. That last vote, 50th vote
Yeah.
in the Senate could come from Arizona. So it's our opportunity. Anything else that we should be thinking about and you'd want to let our folks know in regards to this?
The only thing I'd say is, and you'll link my article. I have some good resources there if someone wants to geek out on it. But
Yep, we will.
you can read the 800-page bill if you feel so inclined.
We'll let you do that.
But what we think is going to happen is this bill's going to come back. It's just going to be cut down from 3.5 trillion. It might be 2 trillion, 2.5, 1.5. Who knows what it's going to be? But the Democrats are going to pass something in terms of like a tax spending bill. So if you hear it pass, don't think that necessarily meant the IRAs are affected. If we do our job right and get the word out, hopefully the IRA stuff gets out, and there's the corporate tax hits and the wealth tax stuff on the truly wealthy that they're trying to target, and we're not hitting everyday people that just don't want to buy stuff on Wall Street entirely with their IRA, which is what's going to get picked up in this. So just know whatever passes, it might not necessarily have closed this out. So just stay tuned. We'll be educating on it too.
Yeah, and we look forward to our audience and to our investors. We will follow this through to the end. May have to have you on again here in a few weeks if things change.
Sure.
And all this information will be in the show notes of the podcast, and we look forward to exercising our democratic freedoms that we have here in our responsibilities. So thanks again for taking lead on this, Matt, and we look forward to having you on here again soon.
Yeah, really appreciate it. Thanks, Jamison.
We're pleased to announce our latest project, Venture on Country Club, is our first project open to investors nationwide, which means that your friends and family can now invest in Neighborhood Ventures projects. It's very simple. Go to smallchange.co, create an account, start investing, and enjoy the benefits of Arizona's booming real estate market.